Hey, this is Usama Young, founder of Believe in You. Thank you for joining us for another conversation amongst our young leaders, life, lessons, and leadership. This is our financial education series. If you have any questions afterward, visit believeinyou.org. That's believeintheletteru.org. Thank you again. As respectful to your time as possible, or of your time as possible, we got Uncle Bob in, and we are going to provide a financial literacy session on credit today. But you know the deal, we start off 50 in, 50 out. So if you can knock out 50, get in as much as you can, as many as you can. But we got 50 push-ups, y'all. Let's get it.
Yes, sir. Here go the 50.
A little slow. Let's rock. Ten. 20. 30. 40. 50.
Yes, sir. Good work. All right, everybody. As we catch our breath, or as I catch my breath, you know how we start, 50 in, 50 out, but also a quick intro. I know we're a little late starting off today, so I won't go through everybody, but the prompt for the intro, your name, where you're from, and a hidden talent or something that a lot of people don't know about you. My name is Usama Young. From DC, Maryland area, and a hidden talent is that I actually drum a little bit. I can hold the beat. And I'll pass the mic to Matthias.
My name is Matthias Peoples. From DC. Let's see. A hidden talent could be videography and photography.
Okay, I gotta put you to work then, man. I need a videographer.
All right.
After you go too, pass the mic to someone else. We're gonna get 3 more.
I'm gonna pass it to David Jones.
Here, David Jones here, coming live from Charlotte, North Carolina. Hidden talent, man. I low key, like, I'm real nice in the kitchen, man. Like I can whip it up. So you know what I mean. That's what I do.
Yes, no humble brag there. He's like, hey, you got it. Pass the mic.
Jabari, what's up? Talk to me.
My name's Jabari. I'm from Largo, Maryland. I got many hidden talents, but I'm gonna just give y'all one today. I can actually sing. Yeah, it's my hidden talent.
Oh, really? So if you're an artist, man, let us hear.
No, you can't say something like that and just be like, yeah.
Oh, I got a song.
Jabari, put your song on the link, man. Send them dudes your R&B song, man.
All right, I got you.
You know what I'm saying? He said, I ain't had my water and my tea this morning, so I'm gonna just send y'all the link so y'all can listen.
Yeah.
Yes, sir. You can pass the mic. We're gonna do one more. Jabari, you got it.
Oh, snap, my bad. Let me pass the mic to my man Ty Jones.
Ty look like he frozen.
Oh, snap. All right, let me pass it to my man Brian Williams.
All right, what's up, fellas? Bryant Williams, from Cleveland, Ohio, by Concord, North Carolina, right now. A hidden talent for me is I'm pretty decent at golf, believe it or not. You know, I've been I used to be real good until, you know, I got into football and everything. But so I'm a pretty decent golfer though. I've been golfing since I was like 9.
Okay. Yeah, we gotta get out there on the links one of these days. All right. Well, I appreciate all you all getting on today for this next session, financial literacy. We're going into budgeting. Thank you. I want to introduce again Uncle Bob, Robert Wynn, to this session, and I'll let you take it from here, sir. Thank you.
Okay, well, thanks again. This is really great to be here with you guys, and I appreciate you hanging in there every time that I'm presenting. Hope you guys are very appreciative and grateful to Usama. I'm talking about so many things that I didn't learn until I was 30 years old or older. And after I figured it out, I just realized how important it is if someone could learn this information when they're much younger and have sort of a preventive aspect to how they manage their financial lives rather than sort of learning by fire, which so many people do. So it's a short presentation, but if you guys can just take it to heart, it really can make a huge difference. We did do budgeting for 2 sessions in a row. And Usama, this one is much more regarding credit, if I'm not mistaken. And so we're going to be talking about credit today. Is that okay, Usama?
Absolutely. Absolutely. If I did misspeak, my apologies. Yes.
Okay, I just want to be sure. So as I've said several times before, I am fascinated by investing. And so when we talk about financial education, I'm on automatic pilot if I'm given the authorization to talk about investing. But there are several other important topics that fit under the umbrella of financial literacy. And there's probably not one that's any more important than credit. So today we're going to talk about credit, and that slogan, know before you owe, is so important because as you emerge into adulthood, you will encounter a credit aspect to your life, whether you like it or not. And what's interesting about this, along with some other things relating to money and finances, is that there's a lot more to it than meets the eye. And that's especially the case with credit, as you'll hear as we go along. Now, my bar is sort of hiding the question that I wanted to ask. So just to kind of warm us up, see what you know or understand about credit, can one or two of you unmute and just tell me what you think some of the advantages of credit is in terms of why would someone use credit?
The advantages of credit would be that if you have good credit, like you pay your bills on time and you don't have a lot of debt and things like that, say you want to go buy a house or like a really nice car or something like that, the bank is going to look at your credit score and say, okay, he has good credit. There's a better chance of him or her paying this money back. And same thing if you go to a car dealership, if you want to buy a really nice car and you might not have all the money in cash, they can say, oh, okay, he has a good credit score. There's a really high likelihood that he's going to pay this money back. He's going to pay it on time.
Okay, you're right on point. Anybody else want to add to that? That was pretty complete, but anybody want to add to just the advantages of credit?
I could purchase things that I might not have in my bank account if I got credit.
That's exactly right. And essentially, if I can get this to advance, see if I can move it forward. Oh, I got froze up here. Let's see. Okay, there it is. I don't know what I did, but those are the things that we want you to know in terms of the advantages of using credit. As Usama said, you can actually buy things before you have the actual total amount to be able to pay for it, and you don't have to carry cash on yourselves. And then those bottom 3 bullets, it can really allow you to be more organized about keeping track of your bills. It can help you to settle disputes because sometimes a credit card company will defend you or hold back on paying you or reimburse your account if there's a legitimate thing to defend. Also, it will help you to build your credit score, which we talked about. Here are some of the disadvantages of credit. So it's like a lot of things in life. And I talked about that one economic term before, opportunity cost. That means anything that we do or take action on, there's sort of a automatic thing that we're not going to be able to do or take action on. Everything has a cost. So even with credit, even though there are a lot of advantages, we have some disadvantages. One of the things that astute people are really going to want to take advantage of is understanding interest and fees. They can eat you up. And that word interest, man, it can be good or it can be bad. It depends on what side of the equation you're on. If you've got money in the bank or you're investing in ways that the companies are paying dividends, you want all the interest that you can muster, and you want that interest rate to be as high as possible. But if you're on the other side where you are the borrower and you need credit, then you want to be very, very mindful of what interest rate you are paying, because that's really money out of your pocket. The same is true with fees, and that's how the financial services industry makes its money. So that word fees, it sounds kind of small and innocent, but a lot of money sloshes around based upon who's got to pay those fees, who's receiving them, and how much those fees are. The other thing with credit is, leaving your credit card around or people getting your account number. It does leave you susceptible to identity theft, and that's just another negative reality that we have to acknowledge does exist. Sometimes it seems too easy to buy because you can buy on credit. So you have to be very, very disciplined about when you're going to pull out that credit card and when you're not. Here's another quick question for you guys, because it's not really on one of these slides, but I want you all to know a little concept that I inserted into this subject of credit. Good credit versus bad credit. And what I mean is sometimes credit is kind of like a wild card if you're playing cards. It can be good or bad. So in what circumstance would it make sense to purchase an item on credit, or in what cases would it not make sense to purchase an item on credit? Let me hear from one or two of you.
It wouldn't make sense to purchase something on credit if it was like a really large purchase. Like say you've got $5,000 in your account. It wouldn't make sense to purchase something that's $12,000 or $15,000 because that's so far out of your budget, and the company that you're buying that from is going to make so much money, not only on top of what you're going to pay, but on top of that interest rate, and that's not even thinking about if you miss a payment or something like that.
Okay, that's really, really good. Any couple others on when it makes sense to buy something on credit, when it doesn't?
It makes sense if it's if you're buying something that is an asset, what is going to eventually bring you money. It doesn't make sense if it's something that's going to depreciate in value once you buy it, like a car or clothes or things that once you buy it decreases in value. So if it's something that's going to eventually bring more money, then it's good credit.
Okay, I was looking for that word, either appreciating asset or depreciating asset. And Brock is exactly right. First and foremost, you don't want to pay for something or acquire an item on credit that you don't feel you have the money, income, or cash flow to be able to pay back. So he's right about that. But I want everybody go into the rest of your life knowing that there are sometimes, if you're really oriented toward building wealth, there are sometimes you want to use credit, and there are other times when it's destructive to your wealth building to use credit. So as I think it was Bryant said, use credit to acquire appreciating assets. And in general order, we're thinking about the bling, if I've talked about it before. If you are certainly buying a business or something that's really going to help you make more money, then credit is okay there. The L in bling stands for land. If you're going to buy a home, or if you're going to buy more real estate that's going to appreciate in value, then okay to use credit, because it's going to allow you to pay up front for something that's going to make you even more money down the road. Now that I for investing, yes, there are sophisticated people that use credit for in their investing, but you better really know what you're doing if you're going to use credit for that. On the other side, if you're going to buy furniture, avoid using credit because you just need to, well, like my wife and I did, slept on the floor until we could afford to pay for that mattress. Or if you are going to buy some clothes, wear that same pair of shoes until you can just pay cash for it. Because the minute you put your foot in it, that shoe is going to depreciate. A car is a very interesting either or. Certainly, you may borrow money to purchase, especially that first car, and it's going to get you to and from work or even to and from school, but don't go way into debt to get more car than you really need. Another book that I will reference is The Millionaire Next Door. And one of the main things they make is that most millionaires actually drive a Ford or a Buick, and they're not driving the Mercedes, the Cadillacs. And I live here in Madison, Wisconsin, where it's not heavily as African-American as maybe Charlotte or other places. But the African-Americans love to park up in that church lot with that shiny Cadillac or that Mercedes. And I've done some financial advising, and I know some of them, I've looked at their accounts, and they really don't have anything in the bank. So you don't want to be about that. I labor that point because I just think so many people get off to the wrong foot in their financial lives because they have used credit for some of the things that they really should only pay in cash. The other is you want to keep your balances low and avoid bankruptcy, which you can go into. So basically, credit, I think all understand that it's something that you acquire in advance of when you have paid for it. And of course, as someone already mentioned, you want to be sure that you have an excellent credit rating, because that's another one of those things in the financial world. Once you're over 18, you are very likely going to have a credit report on you, and that report creates data that actually gives you a score. Now, I said very likely because there are some people who just don't do anything on credit, so they have no credit history. Without that credit data, they cannot have a credit score. Well, you might think that's good, because I do know some people who don't even have a credit card. But suppose one day they have a great opportunity for a land or business, or they just need some credit all of a sudden. They may be denied it because they do not have a credit report or they do not have a credit score. So it's good to have some credit, but keep that rating on the excellent level. Now, there are several types of credit. I'm going to kind of glide through these types because I don't think it's the most important thing for you to know the difference of these types. And Usama does have a set of the slides, and you can go over this in more detail. But sometimes you're borrowing in a way that you're just going to make one single payment to pay back that credit that you have borrowed. A lot of times, if you're just borrowing from an individual, that's how you would pay back. And then here are some other examples of utilities, medical services, your cell phone. You pay it once a month, and you pay that back. Any questions? The other would be installment credit. And this is where you may borrow money and pay back on time, as they say. And in this case, there's a prescribed regular amount that you're going to pay each month or on a regular basis until the whole thing is paid back. Back to those auto loans. another interesting thing, maybe after your first purchase, people who are really on a wealth building pathway, they actually pay cash for their auto loans, because the reality is your automobile is not an appreciating asset, you know, unless you got something super special or a rare edition. Otherwise, it's going to be, like it or not, a depreciating asset. So the best practice is actually you have saved your money in advance before you purchase that next automobile, and you don't trade up into something that you're going to have to borrow money on. This is where I have to be transparent and say, do as I say, not as I do, because I normally do borrow some money when I buy a new car. But I don't buy a new car often. Y'all can see I'm up in age, and let me think. I've had 1, 2, 3, 4, essentially 4 cars in my entire, 40 years of being an adult. And so I've been keeping my cars, I tried to keep them an average of 10 years, but the car I have now is literally 15 years old. I think it has over 200,000 miles on it. So that's a whole lot about cars, but all young people are going to be faced with this. And what I have seen with young people is, if you don't have a dad that's going to go with you, my dad actually went with me when I bought my first car. But if you don't have someone like that, don't go alone, because one of the most common errors I have seen with young people is getting into a bad auto loan deal. So please consult with someone that you respect and has experience in purchasing cars to go with you, because again, getting off to the right start with all of your finances and credit is the way you want to go. You don't want to get into a mistake and then spend 5 to 10 years learning by fire. You're going to use installment credit for buying your home, student loans. These are just things that you are paying back on a regular basis until you've paid them back in full. Revolving credit is something we're very familiar with, especially as it relates to credit cards. And this is where you don't want it to be a revolving door where you're just piling up debt and you're constantly paying on some sort of credit card that you're not paying down every month, because you are paying interest. And again, that's on the negative side of interest instead of the positive side where you're gaining interest. You're just enriching the financial institution from which that credit card comes. So be very mindful of that. Again, if I can just sort of reiterate the millionaire next door tactics. One is, as you grow older, pay cash for your cars. Another is stay out of credit card debt. What Brock said earlier, don't even buy something on credit if you can't pay it in full that month that it comes due. And then sometimes storing gas cards. I'm seeing less and less of that. And then credit reports. Now, this is the part that exists once you're an adult, but you don't know it exists necessarily. So,
if it moves, the car moves.
So here's
hold on, Bob.
Off that spot.
I don't see it. If I want to mute.
I think
you got it. Okay.
Y'all see who that one is?
I think they muted.
Okay, cool.
Yeah.
Good.
So we're shifting now to credit reports and scores. Like I said, people are going to have a report on them if they engage in any kind of credit activity. And that report is buried away in one of the, well, really all 3 of the credit bureaus, but usually one may have a little bit more information than the other. The credit reports are going to carry details about your individual credit history, and the information doesn't get filed by you. Whoever is your creditor, that is, whomever you have borrowed the money from, is going to be reporting to the credit bureau. Not everybody, but certain commercial creditors like credit cards, as well as some of the health service companies, banks and others are going to report to the credit bureaus what your activity has or has not been. There are different reports and credit bureaus. Here are the 3 main credit bureaus. Now, for you to be up to speed on kind of knowing a little something about credit and how credit impacts you, you should know that while there are several other databases of credit information, the 3 main credit bureaus are Experian, TransUnion, and Equifax. And just so your information is on all 3, but generally, wherever you are geographically located, one of them is going to have a little bit more information about you than the other. So just so you know, Experian is located in, I think, the Arizona area. So probably people out west want to be most concerned about Experian. TransUnion is the upper Midwest. I think their base is out of Chicago. So I live in Wisconsin. I'm going to be most concerned about information that's held by TransUnion. Equifax is in the Atlanta area. So most of you, if you're in Charlotte, Florida, or wherever, maybe even DC, DMV, you're going to be maybe more affected by Equifax. So this is an older presentation, and I'm not sure if the numbers are still the exact same, but you certainly should be aware of these 3 credit bureaus. They keep the data, and out of that data, scores are developed. We do now have a few consumer-oriented laws that protect us or give us certain rights, and you can get your report at annualcreditreport.com. Be very mindful of when you are checking your credit score, and even more important, be mindful of any sort of conversation you may have with a car dealer or a banker that's going to check your score. Because if you check it through Annual Credit Report, that's not considered a negative activity on your credit report. But if a banker or if a car dealer or some other commercial creditor checks your credit report, that actually creates a small negative ding on your credit score. The reason being is they're trying to anticipate what's this person going to do. And so if someone is inquiring about your credit status, then there's a suggestion that maybe you're getting ready to pick up some more debt. And so the score wants to be a little ahead of the game, and they're going to ding your score a little bit just in case that inquiry is leading to you getting more credit, i.e. going into more debt. This data comes from all these different sources. Most importantly, banks, and we don't even see banks up there, but credit unions and banks are considered what we call depository institutions. Most people get their car loans and their mortgage loans and real estate from banks or credit unions. And I would state one more thing about buying a car. If you are going into debt to buy a car, try to get your loan from a credit union or maybe a bank, but don't necessarily rely on car dealer financing. The terms are usually less favorable from car dealer financing. The credit cards, collection agencies, and we'll talk a little bit about public records, are all sources of data that goes into the credit union database. I'm sorry, the credit bureau database. Utilities is a very interesting aspect because not all utilities actually report the monthly utility bill payments to the credit bureaus. As a matter of fact, I think half of them do not report. Well, on the one hand, you might be celebrating and saying, oh, good, utilities don't report. So, you know, if I am late on that payment, no sweat. But think about the many, especially lower income people who maybe never did get a credit card because they don't want to get in that trouble. As you may know, most African Americans don't own a home, so they're not paying a mortgage, they're just paying rent. You don't see rent up here. So if people are paying their rent on time, that's not even creating a positive credit history for them. So some low income people, the only thing they can rely on to create some good credit data for themselves is paying their utility bill on time. But yet some utilities don't report that. So that's just something that with what I do, trying to really be an advocate for financial education and financial empowerment, we're in favor of utilities reporting because it does give lower income people who have less financial transactions to still give them a chance to build a good positive credit score. On the other hand, there are a ton of households that are late on their utility bills, and so that's going in as negative. So we'll just see. Now, a lot of data is collected, but some things are not. And people might wonder, well, if they've got a criminal history or some sort of misdemeanor or felony charge, does that impact their credit score? So there are laws that preclude certain information being collected by the credit bureaus. So the criminal background isn't collected there. As you know, if you're applying for certain jobs or what have you, the criminal background might be an issue, but not, you know, in terms of your credit score. And some of this is a little bit of a distinction. So no, they don't know your actual physical medical history or your medical records, but did you pay that medical bill? The accounting department at the hospital, they will file a report if you are not paying that hospital bill on time. And what will happen there, even more often than not, is they will pass that delinquency onto a collection agency. And the first, we've learned this because we've done research on, you know, this whole issue of credit, because it's a lot of disparity and injustice issues that relate to finances in general and credit in particular. So we've done some research on that and learned that the first thing when a collection agent gets your bill for them to start collecting, before they call you, they file that delinquency with the credit bureau. So you don't really want that to happen, because then you're fighting not just with the hospital, but you're fighting with a collection agent. And their whole job is just to get after you to get you to pay that bill. They don't really track your consumer buying habits. Your consumer buying habits will be tracked in other places, but not by the credit bureau. They don't necessarily know how much money you have in your checking account or your savings account, but any sort of credit transaction with that bank or financial institutions, yes, they will have that information. Anything that's non-public records, they should not have, and they're not supposed to keep racial or religious or gender specific. I can't see how they can't have gender specific information, but they say they don't. What they will, yes.
Bob, Uncle Bob, excuse me, before you move on, just something that was brought up in the chat. Can you touch on the historical context of redlining?
Yeah. Oh man, it's, you know, when we start talking about disparities and injustices, that's kind of where I go off because, you know, if you know the history of the United States of America, you know it's been a history of constant exploitation of the disenfranchised. And who's been in the front of the line as far as disenfranchised? It's been Black people. And so I was just listening to something very, very recently, but basically redlining is a process by which banks and lending institutions decide not to lend in a given area. So what I was listening to, I think it might have been just this morning on the public radio station, was the fact that it was legal. Number one, I'll refer you to a book that's very important. I haven't read it yet, but it's called The Color of Law, and it's by Rothstein, R-O-T-H-S-T-E-I-N, and it's called The Color of Law, and it details all of this. But it says it was legal to put into deeds, to put into housing subdivisions, a covenant that Black people, or I don't know what term they used back then, Negroes, were not allowed to be sold homes in various areas. Even after those Jim Crow laws were removed, there was still what they called real estate agent steering, STEERING. You'd say, well, I want to go look at a home in XYZ subdivision. And the agent would say, well, I'm not allowed to show you in that area, but let me show you over here across the railroad tracks. And so that way, there was sort of a agreement about which neighborhoods would be allowed to integrate and which ones they were going to keep totally white. So what happened was that banks participated in that conspiracy. So if an African American wanted to buy in an area that was supposed to be kept lily white, they were denied loans, even if they were capable of paying those loans back. Whereas if they were going to cooperate, actually, they said this morning is, even if they were going to buy in an area that was agreed upon that would become integrated, and of course, you know, of white flight, so it's going to become black pretty quickly, the banks wouldn't even loan African Americans debt for those sorts of purchases. So that's what created what we call the subprime lending industry, which means, well, I can't get a loan from a credit union, I can't get a loan from a bank, but I need a loan. So now these other little organizations crop up, payday lenders and check cashing companies, and they were just lenders in business, commercial credit companies is what they called them back then. And you would get a loan, but it would be at a much higher interest rate than would have been at a bank. So insurance companies participated in redlining, where they wouldn't even extend insurance for homes that were bought in certain areas. Without the insurance, then banks wouldn't cooperate and give the loan. So it was a real negative domino effect that redlining had. So it was several industries, from legal deeds that would say you can't buy in certain areas, and then it would be real estate agents that would not help you buy a property in certain areas. It would be banks that would not loan if you were trying to buy in certain areas. And this happened a lot in agriculture too, where just this morning I was talking with someone who had land in Mississippi, you know, his ancestors, and saying that the land went into foreclosure because the farmers could not get loans to plant crops and harvest. And so they got behind on taxes, and they ended up losing their land. So banks, you know, participated in redlining in the agriculture industry as well as the home buying industry. And then insurance companies participated in the redlining as well, which just meant they would deny the ability for people to buy in certain areas because they would not give them the insurance or the bank lending that they needed. And again, that book, Color of Law, we should all be reading it and be informed about these past practices, because that's what gives rise to a real strong argument for reparations or for certain other corrective measures by virtue of intergenerational exploitation. These are the things that the databases of the credit bureaus would gather their information from. Your basic demographic information as a whole. They won't have it individually, but they will have it to say, you know, 30% of the people who live in this area are of color, or, you know, have a job or something like that. Public records, and you know, there are a lot of public records out there, and it relates to divorce decrees or bankruptcy filings, or even a court judgment on a financial transaction. So there are a lot of public record sources. We talked about debt collectors. They file that information on you right away. So it's interesting how negative information gets immediately into the credit reporting system. Positive information comes in at a trickle. So that's just kind of how it's slighted. Credit account information will be there. And like I said before, any banks or car dealers that are inquiring on you about your credit. The credit bureaus are going to know when that inquiry occurs, and it's going to automatically affect your score in a slightly negative way. So you want to keep those inquiries at a minimum. The demographic info that they're getting from you, because this is how they cross-reference you with, it's surprising if you go to LinkedIn, there are probably 10 Robert Wynns out there. So every name, comes up multiple times. So to really try to have accuracy with what data relates to you, they will match you up by social security number, date of birth, your address, things of that nature. And it's important that you do check your credit report once in a while. They recommend annually, because they're humans that are sort of managing this data. And so they make mistakes. And you certainly don't want to be confused with somebody who's considered a very, very bad credit risk. And, it also is a way to protect against identity theft to check your credit report from time to time. We talked about sources of public record information and tax, and look how long it stays on your record. So it really, is important that you try to avoid creating these kinds of records, because they stay there for so long. If you've got a tax lien that's been filed against you, financial judgments, and some bankruptcies stay on your record for 10 years. That's an entire decade. And I have a family member who did file for bankruptcy. And since that time, I think her credit score is better than mine, because she has been super diligent. But I think just having been miserable for having that bad credit report for so long, it's created, sort of a rehabilitation relating to how she manages credit today. So those are things to be aware of.
Excuse me. I had one thing that I wanted to bring up. I had a storage unit at one point when I was leaving Kent State University, and I forgot about the storage unit, and I hadn't paid. I thought it was paid off, or I thought it was being paid automatically. And next thing you know, I'm getting notices from collections that ended up being on my file for about 10 years. And I was that guy that I had no clue about it until I, got notices and through the bank and saw that my interest rates were increasing. And I just want to let the college students on know, or even the high school students on know that are going to college eventually, or just going on to the professional ranks. Hey, follow this, take heed to what he's saying right now. Make sure you do stay up to date with what's going on with your finances, with taxes, with whatever bills you might have. Just check on it. Make sure you check in, because that way you'll be up to date and won't fall a victim like I did, which is a small case, but it could get even worse.
That's a great point, because underlying that point is there's certain business activities that you really need to do for yourself, or have 100% trust in the person that's handling that. And even the person you think you have 100% trust, I would say do some spot checking every, couple of months behind that, just to know that something relating to your financial world is being taken care of correctly. But your money situation, bills you're paying, the amount you're supposed to have in the bank, etc., you should have personal knowledge of that. Don't let anyone just tell you verbally without documentation of what's happening there. So that's a really good point. This is just account information that when we say the database is collecting information on you, this is specifically what they are collecting. In addition to your name, some numbers that will help them identify your account number, even if it's scrambled, what type of account you have, how much you owe. We'll talk a little bit about that. And then what your credit limits are and your balances. And of course, your historical payment information is all important. These are the folks that will do credit inquiries. And like I said, it's part of business, but you just want to keep them to a minimum and only have them checked when it's a serious need to have these checked. Applying for new credit, you want to keep that to a minimum. And the credit you do have, like a credit card, it's very important that you keep a long track record with a specific credit card or two, rather than switching in and out, because that negatively affects your credit card. When you apply for a mortgage, they're going to check your credit for rent, for insurance, employment purposes, and potential creditors are going to sort of like check on a pre-approved basis from time to time. So those are the times you want to know that inquiries might be conducted about your credit history, but you only want to do it if you have a serious need for it. So credit scores are based on the report. So what we've been talking about are the credit bureaus. The credit bureaus receive data, information about your credit history, and that data then goes into a formula that creates a score. So it makes it easy for the lenders to kind of know how to size you up, just because someone else has already processed all that data and it has generated a score for you. And it's usually a 3-digit score. Generally, the highest that I hear about is about 850. This one says here 720, which would be in the realm of a good credit score. The 600s is beginning to be less than desirable. The 500s are considered subprime. That means if you got any credit at all, it's going to be at the highest interest rates and some really harsh terms. And it's funny, I don't know, what kind of racial makeup everybody is here, but I've talked to some Black people who have credit scores in the 4s. And when I've talked to some white people, they even thought it was impossible to get a credit score in the 4s. People of color, for whatever reason, tend to have lower credit scores. And it's not for whatever reason, it's that I don't think we've understood how important it is to have a positive high credit score. And so we have not been as understanding about what drives a score. And beyond that, we haven't been meticulous about engaging in the behavior that's really going to keep our score high. So I think we'll talk about what keeps your score in good shape. Yes?
And Bob, I think, excuse me for interrupting again.
No problem.
I wanna bring this up and start to bring in some questions, and just due to time restraints. I think it'll be good to continue this conversation. We could have some Q&A right now, but even receive this valuable information next week or potentially on our next financial session. I'd like to get the room's thoughts as well, and some of the young guys, young leaders, and also my peers. What do y'all think, or what have you all received so far as valuable information, or do you all have any questions so far? Because this credit report thing, this hits home right here for a lot, and Bob, you just now alluded to a major discrepancy.
Bob, I have a question, Usama, and Bob, my question is, you spoke about the annual credit score report, in which we can get the free credit score report through freecreditscore.com. What if you have a dispute? How would you go about initiating a dispute that you have on your credit report with
that's a really great point. And in the slide, we have the phone numbers for each of those, but actually now you can go right to the website for those credit bureaus. So everybody should know, just like all the teams in the South Division of the NFL, you should know that the 3 credit bureaus in the United States is Experian, TransUnion, and Equifax. And so you would go to their website and they will have a process where you can file your dispute. If not, you can certainly get their address and write a letter, and they will, and the letter should explain the error. or some people, even if it's not an error, it's just sort of a negative thing that happened, like a bad medical bill or what have you. Some people will actually just write a letter and explain that problem so that when people are assessing the data, they can, factor in those circumstances if they think it's going to improve that person's credit standing. But if you've got a dispute, well, a dispute and an error are two different things. Were you asking about a dispute or an outright error?
Either one is fine, because I think I just wanted to hear you speak on just having the ability to contact and the procedures that you must follow. And you started touching on it with, with a dispute and initiating a letter on your behalf. The reason why I asked the question, Bob, to be fair, is oftentimes you hear commercials for credit lenders where you can go through a third party to talk to the credit bureaus on your behalf. And I just wanted for you to touch on the fact that you don't necessarily have to go through a third party. You can advocate on your own behalf as long as you understand what it is that you're advocating for.
Right, and advocating on your own behalf is so important these days. We see it a lot in the healthcare industry right now, but it's true in the financial services industry as well. And but to understand the difference between an error and a dispute, an error, you go right to the database and send that letter or follow the process according to what the website requires. If there's an outright dispute, then you might actually have to go to the creditor and work it out in some way, shape, or form. If that dispute gets resolved, then you want to be sure that that resolution hits that credit database so that it's not just resolved between you and the creditor, but the database is aware of the resolution as well. The other point is, and my wife uses this from time to time, intentionally buying purchases using your credit card gives you another line of defense, because sometimes the credit card company will withhold payment until a dispute is resolved. They're withholding the payment on your behalf, or they will also participate in advocating for you. So that's one thing about paying by credit card. It might give you another line of defense. Any other questions or comments? And then I know that our time is up for now, but we can definitely continue this along the way.
I have a comment, just piggybacking off of what Madhu said. So, and I have some experience with this. If you've paid something off, creditors, they are quick to send you to collections and say, hey, you didn't pay this. But when you do pay it off, they're not quick to take it away. So you can actually call, one of the credit reporting agencies and say, hey, I paid this off, and then they will actually call the company to, verify that. And then once it's verified, they'll get it taken off right away. But if you don't make that phone call, that could be something that stays on your credit report for years, even though you've paid it off. So.
That's a great point. Yeah. And just to conclude, I want to just point out that this is sort of the secret sauce of the formula that drives your credit score. Look how big this component is. And actually on an app that I saw this morning, this went up to 40%. So the mantra when it comes to managing your credit, pay your bills on time. Sometimes they will just say pay promptly, but the point is there is a due date for many of your revolving credit facilities or even your mortgage. And you want to be sure that the payment is there before the due date. And if it's due on a certain date, like the 15th, we're learning that it needs to be there by really 10 a.m. on the 15th, because if it comes in at 3 or 4 and people have finished posting for that day, then it still could be considered late. And so much of your credit score is tied on that paying your bill on time. The amount owed is sort of a nuanced thing. What they're trying to see is that you aren't exhausting all of your credit availability. So if you've got 2 credit cards, each has a $10,000 limit, and you've got it up to the limit on $10,000 on each credit card, it's going to really show negatively on your credit report. Conversely, if you show 0 on both cards, that's okay. But if you show 10 to 20% of the $10,000 that you still owe, that's not considered that bad because you're not up close to your credit limit. The rule of thumb is you want to keep your debt to about 30% or less of your overall credit availability. There are times when you might go up over that, but the sweet spot seems to be somewhere around 20 to no more than about 30 to 35% of your available credit. So you don't want to go over that. The other things, when we say history of credit, that's what I meant by if you got a credit card when you went to college, just keep it, because the longer you have that one credit history source, the more authentic the creditors think that source is. So you don't want to be canceling a card this year, getting another one next year, and so on, because it doesn't show stability. And we talked about inquiries already, and that has an impact. And then account diversity. And basically, you want some diversity, like a mortgage and maybe a credit card, or you might have a student loan, but it's going to count against you if you have a loan from a commercial credit company, or like a non-bank or a non-credit union. In other words, a subprime lender does not look good on your credit report. So that's why it's important to have good banking relationships. So when you do need credit, you don't have to go to a commercial lending company that's not a bank or a credit union. I will maybe pause here. There's a few more things we could talk about, but this really does give you the main part of it. Anything else?
Man, this was great. I think this opens up a lot of opportunity for dialogue. And again, I want to be respectful of everyone's time, but I do want to touch on some of the things that you mentioned and a few that came to mind for me. I immediately thought about the importance of communication, and how when I was growing up, and how Uncle Bob, you said you didn't learn a lot of this until you were in your 30s.
Right.
Well, I didn't have the conversations with my parents, and I'm sure a lot of the folks on the call haven't, the men on the call haven't. We're all sons, and you all have parents that you can mention some of this to. You can create this dialogue. You can ask questions. I challenge you all to go to your parents and ask them about credit and see what they say. They might have a firm understanding of it. They might not, actually. And I think about what I could have asked my dad. Hey, Dad, should I get a credit card right now? You know, whether that be at 16 years old, 15 years old, or when I was a freshman in college. And I think about other questions that I could have asked. I could have said, hey, what is a credit score? Without being too intrusive in asking him what is his credit score. Because that can be embarrassing if the credit score might be very low amongst other social settings. Like you said, hey,
Right.
Folks ain't even know it was you were able to have a 400 something credit score. Now, you can still ask them, what is it? And say that, hey, you were on this call and we mentioned it. And I think it would be good if I can gain more of an understanding to prepare myself for success, or prepare myself to grow in this space. I want to have more. I want to gain more knowledge. I want to get some of y'all thoughts before we do get off, though. So, you know, I'm good at volunteering people. Hey, Bird, what's up? What you thinking?
So, I mean, I feel like credit is definitely important. Like, I first got introduced to credit because I had to get my alternator went out and my battery in my car my freshman year of college. So I had to get a credit card to help me pay for that, and I actually missed one payment and saw how that affected my credit score, and it became very realistic, I would say, if you've never been introduced to credit or didn't know anything about it, for that to just happen just like that, and see how one mispayment could affect everything and how it could just affect uh different things I would want to do further down the road.
I just saw on here, and I appreciate that, bro, because you got introduced to it early on. What year are you in school now?
This is about to be my junior year.
About to go into your junior year. You've experienced it to a degree. Now you gotta make moves accordingly. I want to get one more thought from a young one that's on here. I just want to get your thoughts, Dakari. What'd you gain from today, man?
Today, I already knew like a lot of the stuff because my mom, when I was being homeschooled, she did like a whole like a month and a half on like credit and stuff. So I already knew a lot of the stuff, but some of the stuff was like new to me, like like the like when it said the negative stuff. She didn't tell us about like the negative stuff comes in like fast, and then the positive stuff comes in like later in the equation. And yeah, I think that was really important to know too.
That's
That's
good.
good, man. That's good.
I want to chime in for a second, man. It's kind of a lot of the things that have been said, and I just want to reiterate. A lot of it is basically like, you know, I started from behind the eight ball. I didn't know anything about credit until I was handed a check and I wanted to go buy a car. And I was already a man at this point, out of college. And I just wanted to let you know, it don't matter how much money you got in the bank, man. Credit is important. Credit is important. I went to get my car, and the guy was like, "Hey, I'll be right back." And he's like, "You know, hey, your credit score is it's not bad, but it's not good." You know what I mean? And it was basically I didn't have any credit, right? So, and you know, you see a lot of commercials like no credit, it can be just as bad as bad credit.
That's right.
So you guys are getting information, like as Mr. Robert has mentioned, like that he didn't get to, he was 30 and I didn't get to, I was 21. Like you have the opportunity to at least start building your credit. Because as an adult male, when you're in the adult world and you have to start buying things that takes credit, people are looking at you like, man, you got income, but you don't, like, we don't know if we could trust you with you know what I mean? And that's not just trying to get a loan. That's trying to get lights in your name for an apartment. That's trying to get utilities. You know what I'm saying? It's credit is key for everyone. And it's something that you should really take pride in and hold dear to you, because one thing I do know, man, it could drop so fast, and it's a long uphill battle to get back to where you want it to be. So starting early, man, and really starting to build a solid foundation, because no foundation is not the way you want to enter the world as an adult, especially when your parents don't have great credit and you can't have a cosigner, you know what I mean? And so really, this is a great conversation for me. It's kind of like a sweet sorrow, because if I would have heard this 20 years ago, you know what I mean, 10 years ago, I wouldn't have been in the situation I was in. So definitely take heed, man. And if it's something as simple as going to your local credit union, getting you a one of those credit cards that you can only get, you know what I mean, for the amount of money that you have. What is this? What are those credit cards called? Basically, it's like a debit credit card, right?
It's like a prepaid card.
Yeah. Those help build your credit. You know what I mean? Something is if you don't have, like, you can't trust yourself, or your parents don't trust you with a actual credit card right now. But yeah, definitely take heed, man. Definitely take heed, because again, this is vital information.
Yeah, and just to underscore that, you know, I do try to just observe what wealthy people do, and you just really can't underestimate how important having access to credit is when it comes to building wealth. And there's no reason to go through United States of America as an adult and not build some wealth. And so it's going to take credit to do that. Like I said, the biggies are for going into business or buying a business or for buying real estate. And those are two major wealth accelerating transactions. And you're going to need good credit to be able to do that. If you just want to paddle along paycheck to paycheck, then not having good credit is not as detrimental. But if you're really trying to move forward, they do it through credit. And that's, why banks exist, is they are really helping people accelerate. So that's what we need to prepare ourselves for, so we can build wealth for our families and communities.
Absolutely. Absolutely. With that, I'm going to close it up. But at the same, before we knock out this 50, fellas, I got to point out something. I thought I was doing something with my little bragging in the back with my game balls and stuff in the back, but I'm honored to say that a friend/mentor is on here, and I see this trophy in his background, right shoulder, dude. Point, hey man, can you even pick that joint up with one hand? That Walter Payton Man of the Year award back there, man. That's major. You muted.
But I'm not even gonna try, man. That thing about 60 pounds.
Hey y'all, if y'all don't know about a Walter Payton Man of the Year, man, it's one of those awards that you get it by being selfless. And I'm honored to have you on here providing your insight, man. I'm appreciative of it. The young leaders on here, I want y'all to reach out, ask questions, just understand who you got on here, man. And they open their door, they ready. D. Jones, a peer of mine, BJ, Bryant, man, all of y'all on right now. Young fellas, reach out. Coach Thomas, I know you don't got your camera on, but reach out, man. Jabari, you young in the game, but you a leader. Matthias, you young in the game, you a leader. Hey, for real, man. Hey, we got college guys on, high school guys on, but also professionals in their own right and Uncle Bob, we appreciate you. Brian, teammate of mine at Kent, man, pouring in wisdom. Thank y'all. We're going, I think, Uncle Bob, I think we should continue this session.
Okay.
On our next financial one, it'll be 2 weeks from now.
All
but
right.
I think we could dig a little deeper. Also meet guys exactly where they're at. And we'll go from there. But 50 out, fellas. Let's get it.
Okay.
Yeah. 20. 30. 40.
Woo.
50. Good work. Good work. Hey, was that you, man? How many you knock out today?
I'm still at 20, man, but
okay.
Yeah, I'm trying to at least keep up to that.
Yeah, you got like 4 or 5, so that's big time.
Yeah, that's true. I'm making some improvement here. I really appreciate it too. Hey.
Easy, by the end of it, watch.
Yeah, yeah, it's coming along.
Appreciate y'all joining.
Well, I appreciate it too. And this is, I gained all this knowledge and I wanted to pass it on. So this is really something I appreciate. I appreciate it, Sama.